Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 29th of August, 2017, about 4:30 p.m. Central Daylight Time. Well, we're now dealing with the aftermath of the North Korean event where they shoot a missile over Japan, over the northern island, I think it's Aikido, and of course the sirens go on, the people there are told to stay in their shelter. Let's assume it was a nuclear missile. What are they staying in their shelters? It doesn't matter. There's nowhere to go. There's no refuge for the people. It's a terrible event. More important is what I was saying on all the TV shows I was doing today, and believe me, I think I did a record amount in one day today. So many networks, I'm not even going to mention it, but I was very pleased to be on. And what I said to them is the North Korean events are short-lived events. What I mean by that is we know they're trying to provoke. It is almost like a child that is in a playpen and it's got a rattle. That was the word I was looking for earlier, I know it. A rattle, and it keeps throwing it out as you as a parent give it back, keep it in there, and the child throws it back out. We've all experienced that as parents. Okay, the stubbornness. Well, that apparently is what the North Korean leader wants. He wants attention. And he's going to get that attention, and he's going to get the sanctions that he wants and all the rest, and he's going to kick and scream the whole way. That is the analogy. Is he going to set off a nuclear weapon? I don't know, but I don't believe he will. Are we going to attack him with our nuclear weapons? I don't know. I don't believe we will. So it's sort of a stalemate. And the idea is in the UN to choke the country to the point where maybe somebody within the country does something about him. I don't know. Maybe he comes to his own senses and says he wants to talk to people. We've seen that before in that. I'm not a politician. I don't know. I know our president acted very presidential today and not getting caught in the tit for tat. He said all the options are on the table and he left it at that. Let's hope he keeps it like that. I think he controlled it. But when we get to the market reactions, you have to, as a market trader and analyst, figure out what to do. I'm a technician. I think I know the fundamentals probably as well as most professionals do in this business, maybe more. And that's because I prepare myself so well for writing my events and talking to my subscribers and things of that nature. But let's take a look at the chart action and see what we've got, and let the chart tell us what's happened. Always remember, when you look at a chart, it doesn't tell you the future. It's telling you what's already happened, and you're trying to predict from there, using some of the tools that you develop over time, what the market may do. I look at the market, barring this week, as having been in an area here of resistance near 1,300 and support near 1,200. This week, the market has popped up over that number. That is bullish in itself. What would be bearish on the chart is seeing the market collapse from here and get back down to this 18-week average of closes. Now, when I say bearish, it would lose its bullish momentum, but it could not be a bear signal because as long as prices are over the 18-week average of closes, I give the market a bullish bias. That's the way that I analyze the chart. What I would not want to see is last week's low of 1280.30 taken out this week. Why? That could give you an outside week. Now, whether that would be an outside week down by the end of the week or close higher, I don't know. But that's a number I don't want to worry about, so I'd prefer to not see that happen as a technician. When I look at the area chart of closes, the market has gone from 1291 to 1318.90 on a closing basis. So we're in an up thrust, and the reason I picked that number, it's just under that last close here that I'm pointing at 1291.60. When you go to the daily bar chart, there's no getting away from the fact that the market on this break was a false break. You had an outside day up. You took out the previous day's low and high. You closed higher on the day, and you've moved up ever since then. So when I put on the swing line study, it's going to go to that number. It's the way that it's created. So that's the most recent low. The most recent highs have taken out this. If you're trending, you normally, not always, but you normally have higher highs, higher lows. In a downtrend, lower highs, lower lows, and I always call that the trend. I also say that you are not trending when you have a pattern of a higher high and a lower low. That doesn't mean the market can't go higher. It doesn't mean it can't have upside bias. In the case of gold, the market has come down, challenged the 18-day average of closes. I term that the line in the sand, the support zone. Held it, came back up, and ran from there. Where might traders have wanted to take some money off the table? Well, one of the zones could be an algorithm called a Bollinger Band. And the Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. The market got up yesterday and today to those numbers. I know you're going to say, Ira, the market settled over it. That number's 1380.30, and we finished the day at 1380.90. I fully agree with you. Let's go to yesterday. Yesterday, the market settles 1315.30 over 1312.60. Now, the Bollinger Band is built so that 95% of the time the market will trade within these bands. It's how the math of the algorithm works. As a rule of thumb, I have other rules, but I don't teach them all to you here in these videos. They're in my trading course. As my rule of thumb, use each day as one of those 5% and subtract it from that 5% when you get consecutive closes over it. That means you got a 3% chance tomorrow of closing over the number. Okay, 97% chance of not. All that means to me, and all that I'm trying to make to you, is that people that buy Bollinger Bands often see that they could do better on an entry point if they're so determined to enter. People that sell out of long positions against them generally are doing better because they're offered an opportunity if they want to come back in to use their other techniques and figure out where to come in. But you have to, on a chart somewhere, have a profit objective, an area where you're wrong, and an area where your trend is set in. It's that simple. And I view that as a profit-taking tool. It could have been yesterday, could have been today. On a closing basis, you gave up $3. Now, the last quotes of the day were $5 lower than this. I don't know where they're going to open tonight, but I'm guessing around that amount. When we come to the slow stochastics, this is an ugly pattern. It refuses to either correct down and get away from being overbought or convert like we saw back here where you embed, and it means that the momentum has shifted in the market to a full uptrend. I'm the first to tell you the momentum has shifted to an uptrend, but you're not getting the chart pattern that I like, and when you don't get what you want, you don't have to play. It's that simple. When you look at the gold ETF, how many days do we have over 80? Today for certain. Yesterday you had that, but you didn't have it the day before. Will the market embed is the big question. If it does, like it did back here, the odds favor that prices will even go higher. If it doesn't and corrects down like this, the odds favor that momentum leads price. It'll carry the market a bit lower. I'm waiting to see. What else? You're not trending. You have a lower low and a higher high. The trend has been in the GDX, the mining ETF. It has the embedded reading. It's been in a clean uptrend. It is riding the upper Bollinger Band. And yes, it too has 2 days in a row where the numbers are over the upper Bollinger Band and the market favors coming back down through it. So if one were long and they're taking partial profits against that, what's the difference? The trend is still locked into the upside. Let's assume you took all your profit. You're looking at another trade. Is there a reason to be short is the right question in none of the gold sector parts. The gold-silver ratio is simply, I look to see is gold weaker or stronger than silver. That's all that I look for. And it helps me if I'm looking to say silver is a better buy than gold, or gold's a better buy than silver, or sells, whatever which way you're going. And right now, it is saying that silver market is a bit stronger than gold because you're needing fewer ounces of silver as this number is coming down to buy an ounce of gold. That's it. That's how I use it. When I'm looking at the December silver daily bar chart, the market is overbought, like gold, went up to the upper Bollinger Band, fell back. You might be getting what's called a bullish crossover where the 18-day is getting over the 100 as early as tonight. What else are you getting out of all the metals we've looked at? Because they went up and they're starting to correct, as long as you don't take out this low, you could end up with a correction that gives you higher lows, and you've already got your higher high in place. Keep that in the back of your mind. You got to think down the road as you make a trade. In the copper market, I look at Hurricane Harvey in a different way, and believe me, I know the tragedy. We've got customers that are there. I wrote one of them today, in fact, and I have my friends have businesses through there, talking their actual businesses, and it's a nightmare. The real nightmare is going to show up on TV when the waters recede, just like Sandy, and you see the devastation that you've got. You're going to have to rebuild. This is a rich city. This is a city that's fourth largest in America. It's got gas, oil, other value. It's going to thrive again. They're going to need copper to rebuild. Think of all the cars that have to be scrapped. Think of all the homes that are going to need new wiring. Think of the businesses, the machinery underwater, new machines bought. I can go on and on. It is not bearish copper. Add to that in copper, China, and copper has a story. I hate to say that, but that's it. It's almost looking like who's going to do the cleanup there? It's going to be a waste material business. I won't name the company. I'm not a stockbroker. It doesn't take a genius to see there's going to be some big contracts. And by the way, it's going to rebuild. People are going to come back. This is not quite like New Orleans. It's the fourth largest city, a major hub of our country. It's going to get rebuilt fast. When we take a look at the platinum market, you came down, hung in at the 18-day average, and then popped up today over it. You know what I'm going to say. You're overbought. You're over the upper Bollinger Band. You could break out and keep going, but the odds favor you're going to run into some profit taking there, just like in the palladium, trying to get back up to the upper Bollinger Band. But here's your embedded reading. This has been, in a technical play, the cleanest of the uptrend plays in the metal markets. In the dollar index has a narrow band and it broke out to the downside. The odds are it's going to try to get back in the band, but until you get up and over this past high, right here at 93.37, I think the market's saying it's in a downtrend. It is oversold, needs a bit of a correction, consolidation, but you're at this point in time as a technician in a downtrend. As you can see, they're cleaning up the boards behind me, so when I do the financial review, we'll have that. I want to remind you all about something I carry with me all the time. You know, when I'm doing my TV interviews, you don't see it, but I've got this open and I'm able to see the prices. I know what's going on. If there's a breaking news event, I've got the news right in front of me. And this is our mobile app built for commodity traders. The weather you'll see in it is built for commodity traders. You're going to see drought maps. You're going to see maps where there's too much rain. You're going to see shipping. You're going to see all kinds of things built for the commodity trader. You can set it up your own way with your own quote pages. You're going to see last. You can see high, low, last, how many contracts have traded, the volume of the day, charts. Charts you can actually read on a smartphone. And it doesn't matter if it's Android or the iOS system. You can change the different studies on your chart. You can edit everything you want. And yes, remember, this is a smartphone. Does it work on a tablet? Absolutely. Does it work on your PC? Absolutely. So you get something that as a trader you can use, and we want to give it to you to try for free. In addition, we have moved, for those of you that have our price counts, our chart of the day, to this. It's in these features now. It is no longer sent by email. You got to get into our platforms to see it, along with my written commentary. You can watch my videos in it. And yes, I can text you and send an email as soon as I put out these alerts. How do you get it? Call us at 866-973-2077. You can go to our website at www.iraepstein.com. You'll see a carousel of free offers. Click on any one. You can do it from there. You can click up here if you're watching me on YouTube. You'll see an icon. Click on it. The forms will appear. Or underneath us on many websites it says, click here for Ira's free offers. Do so. We'll put this in your hands, and I'm Ira Epstein.